Welcome to Admiral Markets. My name is Chris. Thank you for joining us today. We're back with live trading webinars on Tuesday, Wednesday, and Thursday. So that will be the same this week again. And we're going to take a look at the charts and technical analysis and the currency pairs in just a second. First of all, though, we're going to take a look at the PowerPoint, which explains, for instance, the disclaimer here that this material is intended for a global audience. Please take into account that it may not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Then also, the risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. This webinar is for educational purposes only. And by continuing watching this webinar, you agree with the content and the disclaimer here and what it says. All right. So just remember, Forex is a risky business, and you're the one who is in charge of that risk and the risk management. Alrighty. Well, thank you for your attention. Today we're going to take a look at range trading. It's a bit unusual topic for us. Normally we do more focus on some kind of tool or indicator, preferably, but maybe something different for you. I think it could be interesting. Range trading, we'll take a look basically where the market is not trending. Now, normally I'm more of a trend trader, so this is a bit counter my usual strategy, but I think it could be interesting to look at it from a different point of view. Does anyone hear me? Mike is saying no sound. Okay, Thomas is hearing me. Alrighty. So, Bob, yes, I know that you are asked me to increase sound. I haven't looked everywhere in this menu, to be honest, just now when you asked me. Thanks for reminding me. And there's no chance of finding anything that would increase the sound level whatsoever. Very strange. Other softwares do have that sometimes, but not here. So one thing I can do is really the mic is as close as it could be. I hope that that helps. This is, I guess, the most expensive mic, so if this doesn't work, I think Neville, it's a good idea, but Bob already has it at max. So I don't know. Maybe, who knows? Maybe it's the headset. Everyone has their own level of sound that they can provide. Maybe Bob's is already at 100%, can't provide more. Maybe, you know, Neville have maybe a different volume on your speakers. It's strange though. I don't understand it myself, but sometimes technology is not always as handy. Let's see. We got these steps that we're going to take a look at. We're still defining the trend because we want to see a lack of a trend. So we're still defining it, but we're not looking for a trend. We're looking where there's no trend. Opportunity could be when, for instance, price is reaching the top or bottom of a range. Right? That's an opportunity. Checking for filters, for instance, could be, well, in the range example, we would want to see some oversold or overbought situations, right? If we don't have that, that could be a filter. Establish a trigger could be, for instance, that price is approaching that top or bottom. In this case, the opportunity and trigger are quite close to each other, in my opinion. But the trigger could be, for instance, a candlestick wick at the top or the bottom of a range. And the entry method could be either the close of that candle upon the close of a wick, or even the break of the candle low. Let's say we have a clear range. I forgot my drawing tool. 1 second. So we have a clear range, let's say here and here, and price is approaching it right? And we have a candlestick, a bearish candlestick right at the top, or close to the top, or just above the top, like this. We can take it upon the close of that wick, but we can also wait for the break of the low, for instance, right? So that doesn't have to be the same. It could be. That would be the entry method part. I would consider an end of trend, for me, the 34 EMA band. Wei has a question about when I would consider a range in play. For me, there are a couple of things, or two things that jump in mind immediately, is that the 34 EMA band is not in play. So if price is above it, above the 34 EMA band, and there are fractals at the 34 EMA band, then that's a trend. It's an uptrend, let's say, in this case. So definitely would not look for ranges in this particular chart. Now, it could be maybe 2 time frames lower. There could be a range, potentially. Still would be careful. Would still rather take the buys and the longs off at the bottom of support because we have that uptrend on the 4-hour chart. So that environment, preferably not, that we don't have a clear 34 EMA band with price above it and fractals supporting it. Also, what I would like to see is moving averages flat, relatively flat and intertwined with each other. So with that said, let's take a look at the calendar. What do we got this week? We got CPI, Pound News, Core CPI USD, and Fed Chairman Yellen speaking in about 8 hours. And we got some medium and lighter news throughout the day. The pound has a whole list of them, in fact, all kind of various PPIs and RPIs. Alrighty. So with that said, let's see. Let's start with a classical, maybe. Well, this is using basically only the pivot points, the monthly, the weekly, and the daily at the moment. This template and a couple of moving averages. Maybe we could take a look at this. Although I would like to see the more moving averages to see whether the trend is not present at the moment. The euro dollar is definitely messy, but there's still, despite the messiness, still there's some upside trend available. Let me go over to this one here. One second, it just takes a moment for it to load. Alrighty. Euro dollar is pretty flat now. Of course, the euro dollar 50-minute chart is not a good currency to take a range in this small, tight zone. It could be good for Asian, maybe for a couple of pips, not at the open of a European session, because we would expect breakouts, false breakouts, and continues and whipsaws and trends to develop, not ranges to maintain or to maintain their boundaries, right? So that wouldn't make sense. The hourly certainly looking flat, but then again we can see a pretty good strong up move here. That doesn't look like a ranging environment to me. 4-hour chart maybe does. If you look at its bigger structure here. Let me get rid of all of this because there's a lot of lines. Make it a bit simpler. There we go. So on a 4-hour chart, well, still I think despite the fact that it's not big trend, it's still trending. It's still a trending mode. Price broke above the moving averages again. So no, that doesn't seem like a wedge. What does seem like a wedge is actually another currency. I'll just show you in a second. The euro dollar, just in general though, just to finish this currency pair, did break above this magenta. And to me, this could be still a breakout, pull back and go. The opposite could be true too. This could be a trend down with a hook back for more downside. However, if you look at the angle of the downside compared to the angle of the upside angle is steeper than the downside. Therefore, if I look at this, would rather, due to that factor, say that this is a break, pull back and go still. Also consider the fact that the daily is still in that uptrend. That would seem more likely to me. All right, so where could we find the support at the moment? If we put a fib from swing high, swing low to swing high, we can see that price stopped at 23.6, stopped at the 38.2. It could easily fall probably to the 50 or 61.8, and then maybe find a bigger bounce. Even maybe 78.6, but for the moment, basically any of these fibs could be the bouncing spot for upside. That's what I'm counting on, let's say, for this long-term or medium-term direction. Will it happen? We don't know, right? But looking for some confirmation at these levels for that upside. Until we get to those levels, there's the potential basically to move towards those fibs, right? So intraday potential to make those falls. One thing though that is not good about those falls is the fact that we're pretty close to the weekly pivot. All right, so that's one of the reasons that shorting is a bit risky, because you're going to have lots of ups and downs. You're going to have a lot of support along the way. Even though there could be some space to the 50, there should be a weekly pivot right around, I think, a bit in the middle here. 1 second, I have that level somewhere dotted on a sheet of paper. 138.28. Oh, that's actually above, so we broke that level already, actually. No, 138.15 is a monthly pivot. All right, so we already broke the weekly pivot, but the monthly pivot is at 138.15, which we're actually right at now. Sorry, we're trying to push through it as we speak. So could be already a break of that monthly pivot as well, as we are at 138.10, and it seems like we're pushing through this trend line here. So with a minute to go, we might as well wait for the hourly candle to finish. And let's take a look at the 5-minute world. Looks like a good break. So we can keep an eye on this euro-dollar. Let it break, hook back, and we can see maybe a fall down to that 50 fib at 137.89. There's not really a lot of space, but that could happen. One thing we would like to see broken, first of all, is yesterday's low. As an intraday trader, any intraday trader would like to see that low broken before any shorts is attempted, because we're at the low of yesterday. That could always be a bouncing spot, so we need to break that. Price needs to break that level. The green level needs then to hook back, and then we can have a bounce at about the same price level that it is at the moment for about 24 pips to the downside. But not now, because we still have a daily low that's intact. If it breaks the daily low, then hooks back, then we have some more space. Until then, we're in waiting mode, looking for some confirmation of that bearishness indeed. Otherwise, it could still be a bouncing spot from upside. Mind you, it's still early in the day. The day just started, so no rush, especially so early on. It could still be a bouncing spot if we don't break that green. Who knows? It could be a towering bullish candle coming up here. All right, if that happens, what will I be looking for? If you use these moving averages, what we'll probably see is price then spike above the moving averages, make a hook back to the moving averages, and then start to bounce off of it. That's something that I would be looking for. What else is in a range? The Kiwi is in a bit of a range. If you look at it from the hourly perspective at least. Yesterday, therefore, had a pretty good short trade if you look at it from this perspective, from a range perspective. Although we did have the uptrend here, so that could have had its risk as well, but could have been a potential maybe from a range perspective at least. Obviously here a bouncing spot potentially as well. Now that we're at the bottom, there could be a couple of things going on. One is that this is a part of the retracement, that this is the retracement that we're going up, or that the retracement actually is expanding itself with another leg to the downside like this. All right, so we'll have to see which one plays out. The triangle could break to both sides, in fact, the contracting triangle here. Depending on which side it breaks, we'll see probably some follow-through. Upside, we'll see uptrend follow-through. Downside, we could see the retracement go to, for instance, the support level right in here before it bounces. Looking at the Camarilla, let's see. There's a bit of an L5 down below at 83.71. Could be interesting to keep an eye on if we get a bounce here. Not that I would like to take it right here, right now, because we're about halfway these lower lows and lower highs. That doesn't make sense. It's about a 50 fib of the last downside here. But if we see struggle for this to continue down, for instance, let's take a look at the 5-minute world. For instance, here we had recently a lower low. This is the second candle. If we see a hook back that's struggling to break this bottom, then there could be a very, very small risk for a bounce here. That's something to keep an eye on. All right, so it is moving fast, but doesn't mean that will continue like this forever. Normally speaking, it will make some hook back here. Why? Because no one's going to buy right in front of a smaller resistance, even though it's the 5-minute chart. You rather wait for a pullback. That's why you see those pullbacks so often. Not always, nothing is a guarantee, but that's what I would expect on average to happen, right? Because we do have a lot of down momentum. So waiting for the hook back, for the bounce, provides us more confirmation that we'll get the bounce, provides us with the tightest stop loss in this range example, and it depends what you want to aim for. In my opinion, looking at this, let's take a look. If you want to be safe, probably aim for this level here, but 94.06. But normally speaking, the target would be at the top of the triangle. But let's see how many legs we have maybe in this triangle. If this is downside, A, B, C, D, that could be E. E could end anywhere. Doesn't have to go to the top. So therefore, basically waiting for, or not aiming for the top could make sense because it could be the E part of a triangle. All right, so what we have here on the chart, just in case someone is confused and is joining us for the first time maybe, is basic Camarilla pivot point indicator and a couple of moving averages. Okay, and the awesome oscillator at the bottom. So this is a typical range example that could play out sooner or later. From the 4-hour perspective, you can see the Kiwi struggling, right? We already had, this is the third day that we haven't broken this top, so it's nothing crucial. There could still be 2 days before we get, or 3 days even before we get the break of the top and continuation. But looking at the 4-hour chart, we can see some divergence, for instance, between these tops. That's what that's what leads me to think that, or analyze that the intermediate moving average is usually the target when you have divergence. So in that regard, we could see this thrust, the triangle we already talked about, and then another thrust here down to that level, for instance, right? And if we put a fib on the swing high, swing low, then you can see that this is potential space to the downside. It's a reversal trade though, because the trend is still up, but we do have divergence, and therefore that is a potential liable target for reversal traders, the blue moving average. What would that mean on the daily chart? Basically, that would mean here we have higher highs and higher lows. I'm looking at the Aussie now. Sorry. Made a mistake there somehow. Strange. Okay, doesn't matter. Aussie then has the same structure. Clicked it by accident. Anyhow, New Zealand has the same story in the sense that we also have divergence between these tops right in here. We actually have a resistance line like this coming in. All right, so Kiwi 2 has that potential to make a retracement back to the blue band, which is the minus 272 target, or even below it, to the minus 618, for instance. Right? What that means on the daily chart is this: the price is basically potentially making a retracement of this last swing high, swing low, for instance. Okay, something like this could happen, and then a bounce again, because we still have that daily uptrend. Right? We still have the moving averages pointed up. Doesn't mean though that we cannot see some correction here before we continue up. So from that perspective, this entire structure could be a retracement on the Kiwi, but within the retracement, right in this piece, we have a range because this is impulse. This looks like a range, and we're looking for impulse here or there, but in the meantime, we could have actually a bounce trade before we have one of the two breakouts. So with that regard, down to the 5-minute chart, the Kiwi is looking the same. We just looked at the Aussie, I guess, although I thought I was looking at the Kiwi, but we see still same principle on the Kiwi, in the sense that we have a range in play. Why is that? This is Monday's low, or this is Friday's low. This is Monday's low. This is Friday's high. This is Monday's high. Clearly contracting triangle. We're bouncing basically off of potentially yesterday's low. And looking for weakness here and the inability of the Kiwi to break this bottom, and then a bounce. One way of trading it is taking it right at the bounce level here. That's riskier. One way of waiting for some confirmation by waiting for a fractal break. That's more confirmation. Or some price action signal. That's more confirmation. This is very anticipating, of course. This is, the most anticipating trade that one can have if traded like that, because some traders do that. It's only 5 pips off the low, 5-7 pips, and they take those couple of pips risk. In our case, it doesn't make sense because it's already another 10 pips higher. Now that we're looking at it, personally, I'd rather wait longer. I'd rather wait a half an hour at least to make more sure, to have a bit more confirmation that this down momentum is indeed over. So although I thought I was looking at the Kiwi, the Aussie actually are looking very similar, isn't it? It too has divergence, so it too can make a retracement and then bounce again off the support. And I do think that that bounce is likely. Why is that? Because if you look at the daily, right, what do we see? We see a strong momentum up. We see a lot of power. We see higher highs, higher lows. This could just be a small retracement like this to find buyers to move up again. If you look, or find support. If you look at this fib, we broke the 61.8. So to me, the 78.6 fib is viable. It's open. It's right there to be taken out, I would say. Although this fib hasn't been used too much, It's still, I think, a viable target. We did stop at the 38.2 at least here, sorry. Not too much at the next fibs, but okay, let's see. In any case, the 78.6 and the daily moving average here, definitely enough space to trade it. So if we move down and make that retracement of this last swing high, swing low on the daily, I would expect support to kick in, and we have space from the blue line up to resistance, which is definitely, that box becomes a lot bigger than it is now, right? Although the break of the magenta line, we have still some space. Obviously, the space is bigger if the currency retraces a bit deeper. Either way, upside will be with the trend. So that would be definitely interesting. It's just the likelihood of a retrace is present due to divergence. Back to the blue moving average and a bounce. And you can see how nicely everything pieces together, because the 4-hour intermediate moving average is actually equal to the moving averages on the daily here, or basically the green moving average, the long-term moving average on the hourly. So that seems the path of least resistance to me, keeping primarily eye on these two magentas. The break of the lower magenta is counter trend, but is reasonable considering the divergence. The break to the upside is with the trend, and the best trade is the bounce at support, because that has the most space. So in that regard, the odd and the Kiwi do have the same setup. The only difference is that the odd New Zealand is actually moving up quite a lot. Here it is. It's an uptrend in the meantime on the 4-hour chart at least. From a daily perspective, you can see it is actually retracing. It attempted to, it went to the short-term band here, then it went to the intermediate band. Okay, good. Okay, good to hear that. So, no, I was just talking to Wei because the sound was gone for a second there. So, this is a retracement back to the long-term band. We still have to break this top, I would say, for substantial upside. But if we break that, we could really see an acceleration potential of the odd. For the moment, though, we can't assume that, because this could be a contracting triangle as well. And that's something that has to play out. At the moment, it's difficult to know that it will be a contracting triangle. The only thing that we can rest assured of is that we're getting close to resistance. Whether this indeed will be an A, B, C, D, E, as Wei is asking, like, how can we know, at an early stage whether a triangle is being built, is really only due to the fibs, for instance. By using this as a fib and realizing the price could stop at 886 fib for a downside back to the 886 fib, this, in my opinion, I guess the only way, if you look at this structure at least. So looking for some price action signal at the 886 could make sense too. Otherwise, if we do break above it all, then the odd, we could expect some odd strength. Not necessarily to trade the odd New Zealand, but to know that when we look at the odd at USD and New Zealand USD cross, which one is better to trade? Because if we're looking for weakness, and the odd New Zealand is going up, well, then maybe it's better to trade the New Zealand. Now, be still careful with that analysis, because the odd New Zealand, although it's moving up, is still getting close to resistance, which means there's a potential still for resistance level to kick in and push this lower. So we still have to be careful with that, but it's good to keep an eye on it. Euro dollar is not breaking yesterday's low. That's because euro pound is moving up. Pound dollar is going lower. Let's see, pound dollar pivot point 167.07 is the weekly pivot point. Looks like we broke through that today, and we broke through yesterday's low as well. So the pound dollar is getting that energy here to break those levels. Let's see, the pound dollar. Definitely doesn't have much of a correlation with the euro dollar if I look at correlation tables here. On the other chart, it actually doesn't have much correlation with any other currency at the moment. If I look at the across the board here, the closest is pound Hong Kong dollar, or that's actually very close, but that's something I don't have. The after that is pound Swissy, but that's not even that strongly correlated. So pound is really acting on its own here at the moment, pound dollar, which could be basically meaning a potential London fake out at first. We broke yesterday's low by about 13 pips, which is quite a lot. Normally it's 8 pips, as some of you might know. Let me put on a new template here. Yeah, we have pound news as well, by the way, so this breakdown could easily fly back up indeed and see the price moving like this as the pound news is close. Wouldn't expect much follow through with that. Pound doesn't have divergence between the last 4-hour tops here. In fact, pound bounced to the pip off of this broken top here, as we can see. And from this perspective, I would personally be interested in upside, but not right now, right here at the moment. We have this clear top in play, but we don't have divergence. So if anything, it looks more like a potential ascending wedge with a flat top and higher lows, right? And if you look at the daily chart, bigger uptrend here at the moment. So from that perspective, this is looking at definitely more like an ascending wedge, which is not much of a range environment. It is definitely trending this daily chart. We don't have divergence between the 4-hour tops, and we bounce off the broken top probably here. If you look at the hourly, you can see that a bit better. So no, the downside doesn't look interesting at the moment because of that. We're also very close to the L5. So the upside seems, the space seems more to the upside in my opinion. However, with the pound news, I'd rather wait a bit longer, but the confirmation of such, I would say, of the upside will be as follows. Let me just change the camerella here for a second. Alrighty. This could be a good with the trend breakout, I would say. Now, one thing that I would like to see personally as well is a break of yesterday's high. These tops. Although it's tempting to take the trend line, the thing is that we don't have much space before we bump at that level, and that's where we can see a retracement and hopefully again a bounce if you're at least looking for longs, hopefully. So these, the magenta and the tops in here are, I would say, key levels for upside. If we break above those, we could have that space to the upside from a swing trade perspective up to the top, and if we break the top up to 169.70 and 170. I would not be interested in downside at the moment, personally. Let's see if we put a fib on this upside here. What do we have? 50 fib to the pip as well. Another confluence why this could be a bouncing spot. So if anything, I would find the upside actually more interesting. With the news, it makes that a bit more difficult. But here, the principle would be, if the news wouldn't be present, would be that wait for a hook back, that can't break this bottom, and it could be a bouncing spot. Now, looking at the 5-minute chart, there is a strong fall. That would reason against trying to buy the dips because looking at that strength, there could be some momentum still left. So the most safest is waiting for a break of resistance for the breakout swing trade there. Other than that, I would say we're still in a bouncing spot. Very strong momentum here, so I'm still looking for the break of that top, personally. Other than that, let's see. Euro dollar is pushing through yesterday's low. Let's see how it reacts here, if it could really push with a bit more power. To keep an eye on that, and then we're looking for the hook back and continue. In general, the dollar was quite weak last week. We were seeing retracements. We're seeing dollar strength at the beginning of this week. The question is, how far can the dollar strength go? It could be farther than we think. I'm not saying that the 50 fib will necessarily be the bouncing spot. I mean, there is a lot of confluence that makes me leery of going short. If we do break below 166.83, then there could be spaces down to these fibs. I'm not saying. Those would be spaces to the downside. This would be space to the upside. Same for the euro, basically. Space to the downside, down to the fib, and potential fib bouncing spot again. So we could all see the dollar strength potentially continue a bit until we find bigger support levels. What those support levels will have to be before we get the bounce depends from currency to currency, of course, and their crosses and their relationships. The AUD, because it has divergence, I would expect a bit more bigger of a correction than the pound, personally, or the New Zealand as well. The New Zealand, actually, as I said, I wouldn't be surprised to see a bounce. Doesn't mean, though, that at these levels we can see resistance kick in and reject this with the subsequent maybe break for that bigger correction. It could happen. So that's basically the dollar. I would say the dollar CAD is looking bullish at the moment. It is approaching yesterday's high. It's pushing with higher highs and higher lows this morning and continuing its upside like that. It didn't get followed through yesterday. It made some choppy correction like that, then bounced. Slowly but surely started to build on this uptrend here. However, now it's close to resistance. Dollar Swissy is not interested because it has monthly and weekly pivot points right here, so I wouldn't be interested in that. Dollar yen, let's see. From a range perspective, could be interesting actually. Let's see. It was close to resistance. Probably would have to make a move down to this support level, down to the L4, S1 here. That could be a bouncing spot. Moving averages on the 30-minute are flat. Not on the hourly. 4 hour are flat. So that seems like a decent probability. If we put a fib on this downside, we can see minus 272 here as well, roughly at about 101.50, which in my opinion would be a range trade because it would be trading to bounce off the trend line. That could be something to keep an eye on if you like range trades, personally. Otherwise I'm not too interested in the yen crosses. Alrighty, let's see. This is Euro odd. Now, the Euro odd, pound odd, Euro New Zealand, pound New Zealand certainly didn't get the follow through on Thursday that I was hoping for. It was definitely looking bearish in my opinion. It was looking with decent momentum in the past, although we had some struggle a few days before Thursday as well. And unfortunately, instead of the follow through, we just got more struggle. It's annoying. Would have loved to see the follow through. It looked like it was when we were looking at it together live in our trading room, but it totally didn't get any follow through after our trading room, which was a pity. I did lose a bit, but not much because I trail stopped it, which means that I reduced the risk on those trades. But they certainly didn't get the follow through that I was hoping for. And if you look at the hourly here, I think it was all of these four pairs basically in general. So you can start with the Euro odd. Look at this hourly or 4 hour, you can see that there is that downtrend, but there's just a lot of struggle every time price tries to continue here. It finds some support. It did so here, and it did so here already. And if you look at the hourly, you probably see more spikes up in the meantime. Basically, after this trendline break, or this one, depending on how you have it, both are good. All right, this is where we had a lot of power. This was a good correction. Here we had some good follow-through still, but after that, it's been struggling. Right? This is not so much a trend, but more of a sideways move. So that was a bit of a struggle for trending trades to the downside here. This week started with some downside already. Got to hook back a bit of this week. The 4 hour is quite a decent amount of divergence between these bottoms here. So it would be nice if we can go back maybe to these top, for instance, and to this resistance, let's say the intermediate, right, the medium moving averages on the 4 hour. I don't want to trade it up to there because it's in a downtrend, but it would be nice to get that side price up to that level. That would be an interesting short at this resistance spot. Will we get there, though? That's the question. We might not even get there because although we had a lot of struggle up, but we're not moving much down, it's not to say that the upside is taking over control either. So it remains to be seen if we can really get up that high to 149.70, 149.40, sorry. In the meantime, actually, if you look at this last momentum, this could just be indeed finally the breakthrough. We have a daily low here at 146.56. I should say a daily bottom, and here a daily low, very close to each other. Let's take a look at the 15 now. So what happens? What could we expect on this 15-minute chart? Well, basically, if we break H3 here, we could see a short potential maybe down to these support levels, the daily low, and the bottom. But that's a pretty small space. Plus the moving averages here, short-term moving averages are still pointed up. So I wouldn't trade it at the moment. I would like to see at least the short-term moving averages down. What else do we have here? How about a break to the upside above H4? That could make sense. Right? Despite the fact that it's in a downtrend, we do have divergence on the 4-hour chart. And we could potentially see a bigger retracement. Therefore, if we do break above this top, we might see the retracement actually of a bigger time frame happening. So Euro is an interesting position, I would say. But unfortunately, it didn't get any follow-through when I shorted it here. It did start well, but then we got the bigger retracement here, which was actually this on the hourly. And let's take a look. Probably one of the things that, that definitely helped explain it was the divergence of the time. Although the short was good, where I shorted it, I was probably too ambitious with the target I had in mind. Because if you look at this, we already had divergence between these bottoms in play. This was actually the second divergence, in a way, between these bottoms. So it's always good to learn from the trades. And I did exit, though, immediately when I saw these engulfing twins. So at the break of that high, I was out. Reduced a bit of risk at least, not so much on the Euro, but a lot on the others. More, I think, on the others, if I remember correctly. And the problem also was that this was retracing back, as you can see, already heading towards the zero line. All right. In the meantime, we've reached again the zero line here, though. It remains to be seen. I would say the fact that we didn't reach that long-term or the medium-term moving averages at this point could mean already that the correction is over. This could be already an A, B, C correction for those that like any wave, for instance. This could be already the follow-through to the downside. So that's why I think if you look at it, both sides make sense. Don't say that too often. Normally I'm more looking for one side. Pound odd. Well, that has the pound in it, first of all, of course. But pound odd even struggling more than the Euro odd, I would say. It had good falls, but a lot of big consolidation here. Pound New Zealand is absolutely flat. This could be an interesting example if it didn't have the pound in it at the moment, of trying to trade a potential range. Because if you see this breakout here, it's tempting to actually trade it with the breakout, but if you look at the moving averages, flat as can be, and price is just basically bouncing below it and above it and below it and maybe now again above it, right? And going back to those averages. Right now it has the pound in it, so. You're in New Zealand. Also, if you look at the 4-hour world here, building a triangle, and that's not always clear, especially if you're in a good momentum. Like this. Now this one wasn't as obvious because we didn't have divergence between any bottoms. We actually had a very strong trending mode. So if from that perspective, we would still expect actually a break of this bottom to happen. If you traded the 4-hour AO strategy, if anyone had that in mind, the first break after hitting the zero line was here, where I have the green line. The break of that 4-hour fractal would have been the entry. All right. And what you're looking for is 1-to-1, 2-to-1, and 3-to-1 targets. In that case, let's see, I'm just calculating. The 1-to-1 was already achieved, but the 2-to-1 definitely not because we didn't get to the bottom. And this is turning out to be a pretty big consolidation on this 4-hour chart. But as I said, I wouldn't be surprised to see continuation based on this AO. Let me take a look at the day chart. Day chart is showing a bit of struggle because we already made the turn here. We made a turn, dip down and turn again already. In general, though, it could be an interesting range trade because if you look at the hourly chart, if price does get close to the R2 here, for instance, or R3, that could, or R2, I would say, already should be sufficient. We have a trend line there, the top of the triangle. We're still in a downtrend. We have the R2. We have moving averages. We broke a top, which is good because then the opposite happens. Sometimes we have a triangle. We have that downtrend, as I said. What else do we have in confluence? So selling somewhere here could be interesting as a range trade. That could be with the target, limited target for aiming at the bottom, or trying to position oneself for the break, the potential break. So keeping an eye on the debt levels is interesting. There could be various ways of entering in a direct entry order with the stop loss above here could be one way. One could also wait for price action signal at that level or wait for the first 50-minute fractal break. For instance, here, when we had this upside, take a look at this upside here, for instance. If you're wondering how to trade a bounce off of a level, one could wait for this wick to appear on the hourly chart. One could also wait for the 50-minute world to break this fractals, for instance, right? When you break those bottoms, then you get the potential bounce. That's basically waiting for a break after the bounce. So the Euro New Zealand could see that potential there at the top today. Let's see what else. The Euro CAD, basically, I wouldn't be surprised to see some upside today, just because if you look at the weekly candle, we had a bullish candle last week. This week we retraced part of that candle. In that regard, wouldn't be surprised. We see also a very strong uptrend as yet still on the Euro CAD. How long can this Euro CAD continue? There could be problems pretty soon because we had a very strong monthly bearish candle here. Big wick with a bearish close. The bearish close within February's candle. So March's bearish close was within February's candle with a sizable wick, about 60%, 65, 70%. That came after a tremendous 3,500 pip up run after about almost 2 years of upside, very close to this resistance zone here. So are we making a potential top? Potentially. Is the trend bending? Potentially, yes. We've had a great run up, but it could be indeed time for EuroCAD maybe to part with this trend. And if you look, we already had 1, 2, 3 weeks not breaking this top. Is that enough? No, right? Basically, 5 to 6 is usually the rough idea that I look for, at least. So with that said, there's still 2 to 3 weeks that price has time to push up above this top. If price doesn't break above that top within the next 2 to 3 weeks, then it's looking like a failure to break and continue. Then what we see, in fact, would be an impulse here. What we see, because of the time factor, would be kind of like a correction because it's taking too long for the top to break. And then we should see another impulse. This, in other words, for those who wonder, is a classical A, B, C pattern, or a beginning of the wave 1, 2, 3. How can you measure if this is a wave 2 or B? One way is to keep an eye on time factor, because if it takes too long for this top to break, we already had pretty impulsive candles here, pretty bearish impulsive candles. This one totally engulfing the upside here. Another follow through. All right. So that could be part of the downside. If we get smaller bullish candles, not only this week, but next week, the week after, and the week thereafter, let's say, right, what we could see is this week a positive candle, next week a small positive, the week after a small bearish. Well, then that's it. Wait for the retracement of that bearish candle. Sell it about halfway, put the stop loss just a bit above it, and hanging for the ride about up to this bottom, I would say. I'll take a look at the target in just a second. That's what you can expect. So I'm not expecting much to come next week on the CAD. Why? If I look at this Euro CAD, it just, to me, there's a pretty decent potential for that to happen, which means there's not going to be much movement. However, if anything, there could be some upside to the upside. Sorry, there could be some upside here because there's a retracement of downside. However, I could be wrong. Maybe it's not retracement. Maybe we see the break of this top and this is just a dip and we see it move up a lot more. So that's why maybe we shouldn't necessarily underestimate the upside though. But be aware that it might not continue. Be aware that it might fill, the trend might fill, and we might stop at the 61.8. We might stop at the 78.6. So that was my comprehensive, I hope, analysis on this Euro CAD. Let's take a look at the hourly. So with that in mind, this dip could be a retracement of last week. We know there could be this 50% target, which is the next resistance, which means for the intermediate future, though, there could be breakout trades to the upside. Let's take a look where the yesterday's high was here. So that to me looks like a potential bullish breakout above this with the small intraday space here. But if we take a look at the Euro CAD, I want to make sure that what the Euro dollar, for instance, is doing. Because obviously this Euro CAD is going to respond to that. I also see a strong correlation here with the dollar CAD. Not so much with the Euro dollar, actually, on my other computer. So could be good to take a look at the dollar CAD. Dollar CAD keeps pushing. Yes, it does. Pushing through yesterday's high. So that was, as I said, it was a good buy potential here in the morning. That's already behind us, though. But the fact that we are breaking through yesterday's high means that that's good for the Euro CAD too, because the dollar CAD and Euro CAD are more correlated than the Euro CAD and Euro dollar at the moment. So if the dollar CAD is breaking through yesterday's high, that means that there could be this potential for the Euro CAD as well to follow through. Of course, I have to be careful with the Euro dollar. The Euro dollar is, although they're not Euro CAD is not as much correlated with the dollar CAD the last hour as with the Euro dollar. Sorry, the other way around. But still good to look at the Euro dollar. Would be pleasant if the Euro dollar gets towards the 50 fib first, maybe before entering the Euro CAD. Something to think about. But in general, the Euro CAD breakout here on the 15 is looking okay. Let's see, New Zealand, 1, 2, 3, 4, 5, 6. Looks like we had the hook back while I was looking at other charts. But still, I would expect even one more hook back, to be honest. 61.8 bounce. After 1, 2, 3, 4, 5, 6, 6 candle, 7 candles. Now it's too late. That trade is gone, although it's only 5 pips still. It's just the principle that it was the hook back, not here halfway. Maybe some of you were looking at the Kiwi. I was looking at other charts here with you. But if it does make one more hook back, which definitely could, because it doesn't go in a straight line away from a big momentum like this, certainly could make another pullback here and then bounce again. Keep an eye on that. But now I think, looking at the fact that we haven't broken this bottom already for a decent while, with this supporter level in mind, it seems like a decent reward sorry, the risk versus the potential for the trade to pan out up to about 86.70. Seems to be a decent probability. Once again, if we get to this level, I wouldn't be surprised to see again rejection here due to the divergence on the 4-hour chart. Now, we might not even get that high. We could actually literally stop right here. But these two levels would be the primary resistances, I would say. Let's see. So 4 hour is getting a bit of a bounce here. Let's see how that closes, though. 1 hour is making engulfing twins. We can see that indeed the price is making, just like the Kiwi, is making some bounce here on the odd USD. Here too, though, be careful of that pivot. Still looking for a hook back for that potential space here. Just like the Kiwi, though, here too, look for that bounce and rejection. Because of the 4 hour divergence. Of course, things change if we break above resistance. That could be a potential breakout with the trend. Let's see if the dollar CAD can break that daily high with a bit more power. Like at least a close above it would be nice. Alrighty, let's see. Anything else to discuss? I'm not looking for this euro odd as yet because it just turned. So fortunately, I don't think for me, it's not set up correctly yet. This just turned here, which means I need a bit of, if it would pause maybe here, get a fractal, a break of that fractal could be worth it, but there's just a very small space though, because here's already the daily low, and there's a daily fractal. So there's not much space to the downside. A bit of space, but not much. Other than that, let's see. What else do maybe the odd cat we can still discuss. For those in the odd cat long, doing very well, nicely. Potential trail stop, potential to below 102.87, somewhere around 102, 173 for instance. Right, so that's going well. It was a bit of a struggle as this correction unfolded, but you can see eventually the medium bounce. We break above, excuse me, double dip, then break again, and now continuing finally. And the moving averages, the green ones, finally acting as support as they were flat here. The odd Swissy could be a potential trade as well, right, like this. Potential triangle, plus a potential break above the band here. Something to keep an eye on. More even so than the other Swissies, because the other Swissies are not so lined up to the upside, more showing strength. The odd Swissy is the exception actually, which makes one actually a bit more cautious because of that. But other than that, basically, from a swing trade perspective, I'm interested in the potential for the pound to break above this magenta, to be honest. I'm interested in the Aussie for it to finally break, eventually either break lower and bounce or break to the upside as a swing trade. And even the euro to break above again and see dollar continuation. That's primary interest in the swing trading perspective. I'm not interested in trading this swing trade yet on the pound odd just because it's moving too slow to the downside here. Same with the euro odd. So that's, the quick explanation here of the swing trades. Range trades, we already talked about dollar yen potential, the Kiwi, the Aussie potential. I think that's it. And intraday trading, I would say EuroCAD. Dollar CAD was good, but you needed to take it this early this morning when you had this moving averages pulling apart. Let's take a look at that so you can see how that looks like. Right here is where I was taking it because of the fact that we already had the moving averages spread out like this. We still had enough space up to the daily top, which is important for me because you never know. A daily high can always cause resistance. In this case, we broke through it. That's, of course, great, but you can't count on it. But I did have that space. And we had basically a fractal here and a fractal here, which was important for me because why? Because when the moving averages are being torn away from each other, there's always the potential for price to go back to the moving averages. But when it breaks a fractal after that, there's less likelihood of that. You see the Kiwi's already back. Actually, as I said, it's not going to go in one shot to the upside here. This is a bounce range trades idea. Personally, I like these dollar CAD ideas more when you're breaking with the trend. Personally, more than a bounce off of a range like that. But it is possible. Let's see. What else did we discuss? Same story for the Aussie, right? Potentially possible. But mind you that although these could be bouncing spots, they could also be breaking spots. Price could break through the trend line, and then we could see the unfolding of a bigger correction of this uptrend on both the Aussie and the Kiwi. So just because it's a potential bouncing spot doesn't mean it will always necessarily bounce. Doesn't have to be. All right, could be a breaking spot for a bigger correction. That's something we have to keep an eye on. Yeah, cheers, Bob. See you soon. And other than that, I'm looking for euro and pound dollar bounces. And euro CAD continuation. What else do we look at? Oh yeah, euro odd potential upside or downside. But the downside is very limited at the moment. We'll probably, if it moves too much down, we'll have to look for a break of yesterday's low and a daily fractal to see some potential in the downside lower actually. Because there's just not enough space. Well, folks, I guess, I repeated myself enough here because I made a quick summary. So let's see how today's action goes. At the moment, it's still early in the day. Still plenty of time to let things unfold and let situations confirm themselves for intraday and intra-week trading or swing trading, whatever you look at. If you have any questions, let me know. Otherwise, we'll be back tomorrow with a live trading lab, same time, same place. Plus, of course, we will have Tarantula talking about expert advice. Oh, by the way, actually, we have our pro learning lab, if you're interested, tonight, not on Thursday like usual. It's a bit of an exception this week. So let's take a look here at this schedule. You can see Pro Learning Lab, choosing the right style of trading tonight, 4 p.m. GMT. So that's not Thursday, but tonight, later on today. So hope to see you then. Let me know if you have any questions. I'll just wait a few minutes to see if anyone has any questions. No rush in taking trades. Even if you skip one that goes well, you know, there's always a potential later on. So try not to beat yourself up for any trade that you thought could have gone well but you missed. All right, just best is anyhow to, you know, there's plenty of opportunities. Just wait like a sniper for the ones that meet your criteria, and then jump on those. That's always best. Well, don't see any questions. So thank you all for being here. Thank you, Mike, as well. Everyone have a great trading day. Wish you many pips and happy trading, and see you hopefully tonight. Cheers.